Hey there, everybody. This is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, August 13th, 2019. We are now again in the final hour of the market. This is the hour of the market where I feel like the closing prices are the most valid prices of the day and therefore the best prices to make my buying and selling decisions from. And that is because the market makers and the large financial institutions take over the pricing from the algorithms during the day. That is my opinion, and I believe it's true. And, when the big institutions move the price, they're the ones taking over the price. I feel like they have the best idea of what the most valid price is. So that is why I like to trade during the last hour of the day and ideally as close as I can to the close of the day. So, hey, Murit's here. Good to see you, Murit. Thanks for coming. Hope you're doing well in Norway. Brian 512's here. Hey, buddy. How you doing, Brian? Good to see you. Thank you for coming by. So, well, we're having quite a day. We kind of jokingly talked about it yesterday and called it Turnaround Tuesday, and we are having a big day up, approximately the same amount as we had down yesterday. So, it's kind of scary that we're almost getting used to these moves, 400 points up, 400 points down. So the Dow Jones is up 1.6%, the Nasdaq's up over 2%, just over 2%, and the S&P is up 1.68%. So we are having a good day. It's a very green day. Going to be interesting to see what happens here at the end of the day, though. There are a lot of setups, but there's a lot of correlation in the setups. And so we're really going to have to go over this with a fine-tooth comb and decide what we're going to do. Murit says, did you like my Goldman Sachs signal? Let's take a look. Oh, right. I remember what you're talking about. Goldman Sachs coming out and being bearish, and then yeah, you're right, Murit. You nailed that one. You nailed that one, my friend. Hey, Mount Doji's here. Hey, buddy, how you doing? Good to see you. Good to see you. So, all right. So listen, the format for today, as usual, is first we're going to go ahead and run the U.S. legal disclaimer. We're going to come back. We're going to go through all my current positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them going forward. After that, we're going to do a few minutes on trader psychology. Then after that, we're going to go through all the stocks in my watch list, and we're going to look for setups using technical indicators, looking for support, resistance, risk to reward ratios. We're going to use moving averages, ATR channels, MACD, and ideally we're going to look and see if we can get a confluence or a combination of those signals happening at the same time. And then after that, after the market closes, if anybody has any questions about what I discussed today, please feel free. Don't be shy. Just type it in the chat and I'll do my best to clarify. Or if you'd like me to take a look at anything else, I will do that as well. So, all right. Well, that is the plan. And thank you for coming today. I appreciate you investing your time in watching this channel. I hope it's helping. And Murit says, no, the one I said yesterday. I remember you talking about Goldman Sachs yesterday, putting out some news, some bearish news, and that usually does the opposite. At least that's what I remember, Murit. Mount Doji says, Microsoft, USO, ADP caught my eye. All right, well, we will definitely take a look at all of those. So, all right, well, let's run the U.S. legal disclaimer, and I'll be back in about 40 seconds. So hang tight, please. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, thanks for holding on with me through that. So, all right, first off the bat, let's take a look at DDM. So I did buy DDM back on the 6th of August at, oh, now I can't tell this line, 46.37. And the reason that I bought it is because the previous day we closed below the 250 day. This is the 250 day, this line right here. We closed below, next day we closed back above. So this is a good mechanical long-term approach to trading DDM. DDM is the double leverage Dow. And the approach goes like this. If it's under the 250 day, stay out. If it closes above the 250 day, stay in until it closes back below. Now, I like to phase out of my trades, so as long as it's above the 250 day, I will phase out as it's going my way. But if it closes under the 250 day, I would just go ahead and get out. So the key with these kind of approaches is you need to have large wins and small losses. You're going to have a lot of small losses using this approach, but eventually you're going to, catch a trend and get a monster. So anyway, this has worked out so well. Has worked out well so far. Did hit a couple profit targets a couple days after I bought it. Then, as you know, the last couple days we've had down days. I did hit 3 profit targets today. So it's up 3.2% today. So far it's been a good trade. I will continue to phase out as it moves on the way up. Or if it closes back below the 250 day, I'll go ahead and just take a small loss. But you can see yesterday we flirted with that 250 day, but we kept a hold of it and we closed above it at the end of the day. That's why I kept it. Otherwise I would have gotten out of the trade. So anyway, 3 profit targets today. It's been a pretty good trade so far. And this is mechanical like a robot. So as long as it keeps going up, I'll continue to phase. But if it does eventually, or when it eventually closes back below the 250, if I still have any shares left, I'll go ahead and just get out of the shares that I have remaining. So that's the DDM. Sorry. All right, so Johnson & Johnson. I did buy Johnson & Johnson back here on the 8th of August. And why did I buy it? Well, I bought it for several reasons. But the first reason is we had this V2. Here's day 1, here's day 2, here's day 3. Day 2 washes out day 1's low by at least a quarter ATR. Day 3 closes above day 1's close. Now, in addition to the V1, we also took out this fractal. Here's a high with 2 lower highs to the left, a high with 2 lower highs to the right. And in addition to that, we also closed above the 10-day moving average, which is another positive sign. In addition to that, we had a positive MACD crossover. So this is why I took the trade. The next day, I think I hit 1 profit target. Yesterday, no profit target, but it was up, which was nice on a big down day. And then today you can see it's kind of started to form this bullish flag here, and we broke up above there, and I hit 2 profit targets on this today. My ultimate profit target on this trade, and the way that I phase out, I have to have a final profit target, and I designated the 200 day above me as the final profit target. So we'll see if we can make it up to there. Now, if I get up there, I'll run out of shares, but I'll be out of shares, but I may re-enter with a close back above the 200. So that's kind of how I view that. But this has been a really nice trade so far. It's moved up. I mean, since we've bought it, it's to the close. It's up about 1.45%. But the nice thing is that it was going up when the rest of the market was going down. So it's kind of an added benefit. But anyway, this is looking really good. Again, my ultimate profit target's getting pretty close up here, and we'll see if we get up there. If we do, we'll phase out of everything. My my trailing stop at this point probably will be at this point here, probably will be the 20-day EMA. That will probably be, and if we keep moving up, then I'll use a low of the close of the low of the previous day. So if we have a close from the low of the previous day tomorrow, we'll also lose the 20. So that's kind of my thinking on Johnson & Johnson. But this has been a great trade so far. Hey, Steve Burns is here. Hey, buddy. How you doing? Steve says, hey, Greg, this volatility has been wild. Very headline-driven market. Yeah, It's been a monster. I was just saying before you got on that, we're kind of getting used to these 400 point up days, 400 point down days. There's just a lot of volatility. I mean, so I don't know. I'm going to trade my signals. I'm a little leery of this bounce. But that's just my opinion. It doesn't mean anything. Like you said, I'm concerned about the headline risk. I'm concerned about FOMO, people having the fear of missing out on this move back up. I mean, the driver for this move today was, President Trump coming out and saying he's not going to put those additional tariffs on. So, I mean, that is good for the market, but you never know. So I'm flirting with yearly highs today, thankfully. And so I want to be a little careful today and not get caught up in the emotion of having a big day up, because you know we're still range bound. We're still basically in a range in a lot of stocks. So we basically just got back what we got yesterday. So we'll see how it goes. Steve says so far today is a bounce inside a 4-day range. Yeah, exactly. Yeah, exactly what I just kind of. You said it better. You said it better than I did. But yes, you're 100% right. All right, let's get on to Merck here. So I did buy Merck back here on the 31st of July. We've been in this about 2 weeks, but it has been a good trade. And the reason that I bought it is we had earnings. We gapped up. We came back down. But even though we reversed back down, we were still able to hold the previous support of the top of this range. This used to be resistance, then we got above it. Now it's going to act as support, and it held and it held and it held. We had a 520 cross. We had MACD go positive, and then kind of the cherry on top for the whole thing was, I remember this day. This was a big down day in the market, and I liked how Merck, the relative strength of Merck, was still up on the day when the rest of the market was down. It had good earnings. It held the support. It held this support back here, and had the 520 crossover, the MACD crossover. So that is why I bought it. And you can see this has been a really, really nice trade. As it's moved up on the up days, we've scaled out, we've scaled out, we've scaled out. I hit 2 profit targets today. This orange line here, this is the previous high. So that's a little bit of a red flag area for me. My ultimate profit target when I do my phasing out, well, it looks off now, but yesterday it was the 6 ATR channel. The blue line is the 70 RSI, and the orange line here is the previous high. So, from here, if we had a close below the previous day low, I would definitely get out. Tomorrow, if we rejected the previous high and then closed underneath that, I would get out. If it closes above, I would keep it. And then if it rejects the 70, I would get out. If it closes above the 70, I'll keep phasing out until I get to my ultimate profit target. And at that point, we'd just be out of shares. But this has been a great trade. I mean, from entry to currently where it is right now, 3.73%. And again, it's one of those trades where actually we made money on it, even though the rest of the market was going down. So I'm really happy with the Merck trade. And like I said, we did get 2 profit targets today. Steve says lots of resistance at the 50-day SMA and 50 RSI. Yeah, for sure. For sure. So I don't want to, like with any kind of trading, everybody, you trade your signals, not trade your emotions. I know it's human nature. Wow, there was some good news on China and da-da-da. But, let's see where the market prices close today and let the market tell us what looks good and what doesn't look good. So, let's be careful. When I got up and looked at the market, my first initial instinct was, okay, you really gotta be careful today. Hey, Frederick's here. Good to see you, buddy. Thanks for coming. This is Frederick from France. All right, Netflix. So I did buy Netflix yesterday at 311.21. The reason I bought it is for a couple of reasons. We had a low, we rallied, we came down, we made a lower low. We did not have a bullish MACD divergence here. We did, on this move down, we had really deep bars. We did rally, but we didn't paint any green bars. You need to paint some green bars for this to be a valid double bottom with a bullish divergence. But even though it's not a legitimate double bottom with a MACD divergence, the second move down, the momentum based on the MACD was lower. So that, I do look at that as somewhat bullish. And at the same time, you can see the RSI on this move down here. See how deep it was? And then over here, see how we got lower, but it was higher? So that is a legitimate RSI divergence. So then, okay, so we broke out to the new range to the downside. Then we rallied back into the range. I mean, okay, this is positive. But then we had a day down. We tested the new range to the downside from the lower than this low here, and then we rallied back up with a V1. So I did like the double bottom. I did like the slowing momentum. I like the RSI divergence. I like that we had a false break to the downside, came back into the range, tested out of the range, and then closed back up. I only took a half of position on this yesterday because it was under the 200-day. Looks like MACD is crossing over positively today. I did get one profit target today, luckily, right at the top, which is good. You can see my ultimate profit target on this is the 200-day. The blue line is the 50 RSI. So, I'm going to have to see how it reacts around the 50 RSI if we get up there. On the downside, we did reject the 10-day moving average. We're still into the range. My initial stop right now on this is halfway of the washout bar. Here's the V1, here's day one, here's day two. Day two washes out day one, closes above day one's close. That's the valid entry signal. The stop will be halfway of the washout bar. So if I get a close below 307.40, say tomorrow or today, then that will be my stop. But you can see the risk to reward's good. The risk is, theoretically here, and the reward is theoretically here. So, all I can do is take a look at the setup, see if it fits my criteria for, does it have an edge, identify my risk, take the risk, and it's either going to win or it's not. But and also identify the risk to reward, I should say. But that comes from Mark Douglas from Trading in the Zone. But I really, really like his book, and I really like how distilled he has that down. Basically, identify your setup, identify an edge, identify the risk to reward, take the risk. It's going to win or it's going to lose. You have no control over it, and then on to the next trade. So, all right, so that is it on Netflix. Yeah, but we did hit one profit target today. It has come off since then. SPY. Well, this was a disappointment, but you learn to deal with disappointments pretty quickly in the market. But I do buy the SPY each day at the end of the day. I buy it every day at the close. I sell it every day at the open. So why would I do this? Well, I'll show you. But I did buy this yesterday at 288.07. And it opened up at 287.74, and then it took right off. So I did take a very small loss on this. I think it was like 30 cents or something like that. But then it rallied strongly after that. So you might ask, why would you do that? It doesn't seem very technical. This is based upon a study from Liz Ann Saunders at Bespoke Invest. But if you bought the SPY at the open each day, if you buy it in the morning and sell it in the afternoon, if you did that since 1993, you would have returned a negative 13.9%. But if you did the opposite, if you do what I do, which is I buy the SPY at the close every day and I sell it the first thing the very next morning, so completely opposite of this, if I would have bought the SPY at the close each day, sold it at the open since 1993, I would have had a 634.2% return, meaning that more than all performance, all the gains in the S&P since 1993 have come from the prices being bid up in the aftermarket and being bid up in the pre-market session. So, this is a long-term approach for me. I identify the edge. The back test shows that the edge works. It's something I have to do every day. It doesn't always work. There are drawdowns. I use only a 10% position size. So, if I had $100,000 in my account, I would buy $10,000 worth of SPY in the afternoon. I would sell $10,000 worth of SPY that next morning and let the edge play out over time. And you can see it's very clear that this does have an edge, but it does have drawdowns, so you have to be careful. There's going to be times, like any other trading methodology, where it goes against you for weeks, months, possibly years, right? But it's just something I've committed to doing every day, and I've been using it since February 26th, and it's done very, very well. Dr. Jorgensen says, SPY, no wonder I didn't sleep very good last night. Well, you only lost 30 cents on it, Bruce, so you should have slept better than that. But the missing out part, I can understand that. So anyway, very small loss. I will be buying this again at the end of the day, like I do every day. All right, I just want to run through these real quick again. So S&P, or the DDM, is the double leverage bought under the 250 back over. We've hit 3 profit targets today. This is the discretion, or this is a mechanical trade. I'm just going to trade this, stay in this as long as it stays over the 250. If I run out of shares, I'm out of the trade. If it closes below the 250, I'm out. Johnson & Johnson hit 2 profit targets today. It's doing really well. Close below the 20 would be my trailing stop at this point. Merck hit 2 profit targets, doing well. A close below the previous day's low. To the downside, if we reject the previous high, if we go above it and below it, that will be my signal to take profits there. Netflix closed below yesterday, which is the halfway of the washout bar, targeting the 50 RSI, and then SPY. I just talked about the SPY. So that is that. You guys know that I like to talk about trading psychology a lot. I feel like it's the most important part of trading. I think it's the difference between whether or not you're going to be a successful trader long term, or whether or not you're going to be a losing trader. The mechanics of finding yourself an edge or patterns, it's important, but at the end of the day, what goes on between your ears, what goes on in your mind, and how you deal with ego and how you deal with frustration and fear and greed, that comes down to a skill of having the psychological skill to overcome those human tendencies in trading, and trading brings that all out. So I did find this is from Trading Proverbs, at Trading Proverbs on Twitter. I like this channel. They have good sayings about trader psychology, and so I did want to share this with you. But this is actually from Alexander Elder. And as you guys heard me before, I have studied one-on-one with Dr. Alexander Elder at his home in Vermont. And, I always looked up to Dr. Elder, read his books, understood a lot from his books, but I felt like I would get more out of it if I actually studied with him one-on-one. So I did study with him one-on-one for 3 days. I did learn a lot. And so this is one of his saying: a losing trader is one who overtrades, his money management is sloppy, and he takes risks that are too big. So a losing trader is one who overtrades, his money management is sloppy, and he takes risks that are too big. So, that pretty much sums it up, everybody. Dr. Alexander Elder, in addition to being a famous author and a famous trader, is also a psychiatrist. He knows what he's talking about. But, let's look at this one by one. A losing trader is one who overtrades. Well, overtrade, why are you overtrading? You want the action, you're impulsive, and what's the downfall of overtrading? Well, you're not waiting, you're not being patient, you're not waiting for the correct setup to come, right? A correct setup with an edge. So, that's not going to work. You can't overtrade, you have to be patient. So, overtrading is the issue. His money management is sloppy. Well, money management's huge, right? You have to adhere to your stops. You have to make sure all your ratios make sense. So if you're not doing this, if you're not paying attention to your money management and the size, the position size, and the risk that you're taking, You are, you're not going to make it. I'm telling you. And he takes risks that are too big, right? He or she takes too large of position size. And as many of you know, in my opinion, the only thing you have control of in this market at all, when you distill it down, the only thing you have control of at all is your position size. That is it. So, if you do these three things, you overtrade, your money management is sloppy, or in other words, you're not adhering to your stops, you're not doing what you're supposed to, and you're taking risks that are too big. This is the trifecta from hell. If you do these things, you are not going to be a successful trader. So, by default, let's just do the opposite so that we can be successful traders. Let's not overtrade. Let's be patient. Let's wait for our setups. Let's wait for our edge. Better to just sit on your hands and not lose money. And, if the market's going down, you're making money by not losing money. So let's not overtrade. Let's be patient. Let's get our money management under control, right? Let's make sure we adhere to our stops. Let's follow our process, do what we're supposed to do. Let's not get sloppy. Treat it like a business. And then third, don't take too large of risk. That's the number one issue that's going to get you. Because eventually, if you position size too large, you're going to run into a monster. It's going to destabilize you. So let's not overtrade. Let's keep our money management tight. And let's take, conservative, valid position sizes. Let's not get crazy and take too large position sizes. So anyway, thanks to Dr. Elder. I appreciate everything he taught me when I was with him. If you have not read his book, The New Trading for a Living is a great, great book, and I highly recommend it. So you can find that on Amazon. The New Trading for a Living by Dr. Alexander Elder. So anyway, I wanted to share that with you. All right, so let's move on now and see. Let's see. All right, well, let's get going down through the watch list and see. There are a lot of things here today, but you've got to keep a lot of things in mind. We already have some positions, right? I already have some positions. I have to factor that in. I don't want too much correlation. So right off the top, I do have DDM, which is an index. I have Johnson & Johnson, which is, kind of healthcare, consumer discretionary combination. Merck, which is pharmaceuticals. Netflix, that's about the only tech that I have at the moment. And then I will be buying SPY at the end of the day. So we've got some indexes, we've got some healthcare / pharmaceutical, and a little bit of tech. So let's keep that in mind if we see lots and lots of different things to possibly buy today. So Apple had a monster day today due to the tariffs. So, obviously that's very bullish. It's over the 1 ATR channel. It's just too high for me to buy. I really can't bring myself to buy this. It's over the 1 ATR channel. It's a huge chasey bar. It doesn't mean it's not going to continue to go up. And if you guys have Apple, I hope that it does, but I really can't get involved in this bar. Ideally, what I'd like to see is I'd like to see it come back into the middle halfway of the range, possibly take a small position there. But anyway, to me, the train's kind of left the station on this, and there's really nothing I can do with this. So on Adobe, we had this big sell-off. We did have the rally. The people that bought down here, looks like they sold up here. That drove it back down. This is positive today. I mean, technically we did have a subpar V1 here. Here's day one, day two. Day two did wash out day one. It's underneath. It's finding resistance at the negative downward sloping 1 ATR channel. It found resistance at the 50 RSI. I'm just going to have to let this one go. There's really, even if it did trigger the V1 here, I'm sorry, the V2 back in the range here, I'm still concerned about this previous high here. So nothing on Adobe. Look at silver, everybody. My gosh, what a monster bar. We opened up higher, came screaming down, did catch support right at the 20-day EMA, back up. So there's a lot of emotion going on with this bar here, tons of volume. I really can't get involved here. Ideally, I'd like to see this come down, drip down, start to stabilize within the -1 ATR channel, look for a V1 back up. Or the 5-day EMA closing below the 20-day EMA and then back over. We had the same trade back here. The 5 was under the 20, closed back above the 20, inside the channel, which I liked, was above 50 RSI. And you can see we had a beautiful trade all the way. I phased out all the way to here. But nothing on silver today. Advanced Micro went up strong on that news with Twitter and Google. Had second day up, couldn't hold it, came back down. We're actually negative on the day. That's not great. It is holding the 50 RSI, which is positive, and it looks like it's holding these, these supporting moving averages here, the 20, the 10, the 50, and the 5. MACD is positive. So what I'd really like to see now, we did make a higher high. I'd like to see this start to move sideways a bit. I'd like to see it consolidate and then have a V1, V2. That would be a decent trigger. So like I was talking about with Dr. Alexander's post there, let's be patient about it. I mean, it's starting to look good, but everything hasn't lined up yet. So, couple more days sidewards movement, ideally, would be good. Even if we came down tomorrow, went below and reversed back up, I would be willing to take that there as well, but nothing there. All right, so Amazon is up nicely today. We made a low, we had a rally, we had a couple days back down low. Now we have a really nice V2. Here's day 1, here's day 2, here's day 3. Day 2 washes out day 1, day 3. Looks like it's closing above day 1. Yeah, this is a tough one. I did buy this back here when we closed above the 250. I scaled out. And then yesterday when we lost the low of the previous day low, I got out for basically, it was a profitable trade because it was a scratch trade on what I had remaining, but I did phase out here. So it did make it positive. This is a tough one. This is a tough one. We're still below the -1 ATR channel, but on the bright side, we're above the 1 ATR channel, the third ATR channel. It's a 41.95 RSI, 42 right now. So, my theoretical profit target is going to be the 50 RSI, giving me 8 points to the upside and probably 12 points to the downside. So the risk to reward does not look all that great. I'm a little concerned that it rejected the 10-day moving average. So, volume is good. Volume is high. I just feel like here that the rejection of the 10-day and that downward sloping -1 ATR channel, we're definitely going to find some resistance there. I just don't think the risk to reward works out that well in the context of this chart. So I'm going to let Amazon go. Boeing. Nothing really on Boeing today. Alibaba. Well, we had a big day today. It did reject the 200-day above it, which is a bit of a bear sign. I was considering buying this on the V1 yesterday when here's day 1, here's day 2. Day 2 washes out day 1, closed above day 1's close. I saw that earnings were coming out. It was a little concerning to me, and I actually ended up deciding to buy Netflix instead. Looks like this would have been the one to buy instead of Netflix. However, just a good teaching example here. If I had bought it yesterday with the V1 and the rejection of the third ATR channel and it being a higher low, if it closes here, I don't have it, but if I did, I would get out here because it's rejected the 50 RSI and it looks like it rejected the 200-day. So obviously I wish I would have bought this. It would have been a good one-day trade. But again, if I was in this trade, yes, I would have phased out probably 3 profit targets, but I would have locked in the whole profit if it closes where it is right now with the rejection of the 50 RSI and the rejection of the 200. So nothing there. Caterpillar was interesting earlier. You see, I drew the line here. Earlier in the day, we did have a nice V2. Here's day one, day two, day three. Day two washes out day one. At one point during the day, we had closed above day, or we were above day one and back in the channel. We also went from under the 30 over the 30, which is positive. So all of that considered, I was, this is on my list to buy, but now we have untriggered the V1, right? Because here's day one's close. We were above it. If we close right now, we would have untriggered, and it looks like we've lost the third ATR channel too. So I'll keep this. If this does close above the day one's close and back in the channel, I will consider it will be a half position because we're underneath the 200-day moving average. So we'll watch that one. DDM we have. Walt Disney. Nothing really on Disney. Like a lot of other stocks, you can see at one point during the day, we did trigger a V2, higher low V2 back in the channel, which is good, but now it's untriggered. So I think I'm just going to let Etsy go. Ford Motor Company up 1 penny on a day. This is technically right now a higher low V1. You can see this. It did wash out yesterday's low nicely. Right now it's flirting just with yesterday's close. It's higher low. It's good, but nothing. It's not strong enough. Facebook. Well, it did trigger a V2 today. Here's day one. Here's day two. Here's day three. Day two washes out day one. Currently, day three, it looks like it's still above day one, which is good. But what I don't like is it rejected. It got close, probably close to the 50 RSI. It definitely rejected the 50 moving average. Currently, it's rejected the -1 ATR channel, downward sloping, and the 10-day. So I'm not going to get involved with Facebook either. Here's Five Below. This is a beautiful V2, right? Here's your low. We have a rally. Now we come back down. Here's day two, washes out day one. Day three closes above. Looks like it's going to close above day one. Triggered a fractal. It's underneath the fractal at this point, but it did trigger a fractal. The problem is we're at a 42 RSI, 4250 RSI. My theoretical profit there is going to be a 50 RSI, giving me 8 points to the upside, 12 points to the downside. So I'm going to let this one go also. Gold kind of had a crazy day. Same with silver. Did bounce right off that 10-day. Looks like we're flirting with the third ATR channel. It's just too high for me here. I would like to see this come back into the value zone, or I'd like to have the 5 cross back below the 20 and then back over again. But it's right now the risk to reward is not good on this trade. Here's an example of a better setup, right? Better, the context of the chart was better. We had the 5 go under, over, we took out a fractal, we were in the value zone, or the one and the -1 ATR channels, and you can see this was a great trade for us. We scaled that up to there. So nothing on gold today. Google. All right. So, I mean, here we have a higher low V2, but currently where it's at, it's a little too high. It's too high in the channel for me to take this. We did take this back here when we had this higher low V1 in the channel. Better risk to reward ratio. Did have a nice move. I can't remember. We hit 2 or 3 profit targets. Then yesterday it closed below the previous day's low. So anyway, this ended up still being a profitable trade. Obviously wish I hadn't got out, but it's fine because those were my rules and I did follow. And then today, it's triggered another higher low V2, but I don't like where the entry is in the channel. It's just too high for me in the channel. So I'm going to have to let Google go. Goldman Sachs has flirted with that 100-day moving average, but nothing there today. Frederick says, is it difficult for you to trade by now with all the different news coming out every day? Excuse me. Yeah, I mean, but that's trading, Frederick. I mean, news does come out and you just have to navigate around it. But yeah, it's been, when you have a lot of headline risk, especially like this, Yeah, it does make trading difficult. Max says I was WTF shocked in the morning. Didn't have time to do anything. Full ATR up in the first minute. Yeah, it was big news. A lot of people buying, a lot of shorts covering. It's going to move quickly. Max says entry signal fired and turned to overextended before I had time to put the trade on. Well, I'm glad to hear you say that, Max. I'm glad to hear you that you're aware that it had become overextended. I call it chasey. When things get a little overextended, and I feel like I'm chasing it. And kudos to you for acknowledging the difference between something moving up and something being overextended and not chasing it, right? And maybe waiting for a pullback to get a better entry. IBB having a nice day up here. It's been kind of a sloppy mess. Really what I'm looking for in IBB is I'm looking for the 530 EMA crossover. This is a good back-tested, profitable long-term approach to trading IBB, but we're not quite there, but it's getting closer. Eventually it will cross. Intel did have a nice big day today. I mean, technically it was a subpar V1. It was a decent V2, rejected the third ATR channel back in. But again, guys, it's a 43 RSI. Just because you have a signal, I always want you to take a look at your RSI and work your numbers and see, I've got, if my assumption is that we're going to have some resistance at the 50 RSI or the 50 SMA, then I have maybe 7 points to the upside. If my stop's going to be a close below today's low or underneath the 30, I've probably got 17 points or 13 points to the downside as risk and only 7 points to the upside. So I'm going to have to let Intel go. IWM, it's this is a little different. It's based off the 200. I mean, earlier today we did have we were back above the 200 with a higher low, which is always good, much better than just a V. A lot of times these V's fail, but then when you have a higher low, then close back above it would be different. If I'm working just off the 200, I don't look at the RSI as much, but we'll watch this one, see if it closes above the 200. Johnson & Johnson, we hit 2 profit targets on the way up today. Coca-Cola is working on a higher low V2. At the area that it's at right here, it's not too high. It's still within in the range of my channel of where I'd be interested in buying it. We did close below. We came back up, rallied. Probably going to have some issues up here. I think I'm going to let that one go. Lockheed Martin had this really nice V2 here. I believe this was Max or Murat. I think it was Max that called out this nice V2 here, higher low V2. Yeah, great call. Wish we would have taken that, but that one's really done well, but nothing there today. MasterCard, even with this big day, it's still under yesterday's high. At one point, it was trying to work on a V2, didn't quite get there, would have been valid. But I don't think anything on MasterCard. We did have a nice trade on MasterCard about a week ago. We tested the 100-day intraday. We also we tested the 30 RSI, closed back above. That was my entry point right there, giving me a good risk to reward ratio. We phased out. I phased out all the way to the top, but I am now out of the trade. How are we doing on time? Okay. Merck, we hit the 2 profit targets today. So Microsoft is definitely a possibility today. We closed below the channel. We came up. We had a couple days down. We reversed back up. It's a V2. It's above 50 RSI. It's a legitimate V2. We have the moving averages below us. So Microsoft does look decent today. So we'll mark that. Netflix, we already talked about that. Hit 1 profit target. Nike, big strong day off of the 200, but yeah, I just don't think I'm going to do anything with Nike. Philip Morris is interesting. I mean, there's a big engulfing bar today, which means it went below the previous day's low and certainly back above. It did move back above all the moving averages. This does have some potential to move here. Let's look at the weekly. You know, we had that big move up. We came back down. Looks like we held halfway of this move from a Fibonacci standpoint, working on a V2 on the weekly as well. So Philip Morris is interesting. I'm going to watch that. Here is PayPal. Here you have a nice V2. We went under 30, back over 30 with some volume. You have the 10-day above here. You're at about a 39 RSI, so that one looks okay. We'll take a look. Here's the index, the Qs. We did trigger a fractal, which is always good. We did have a valid V2 today. On the other hand, we did reject the 20-day moving average, and we have rejected 50 RSI. So this one is a little, let's wait and see what happens with that. Snapchat, nothing there. The SPY, V2, higher low V2. Did reject the 50 RSI. I'm not going to take this one for a regular position because I have the overnight SPY. Square, not doing too much today. SSO V2. This is the double leverage SPY V2. Same pattern, rejected up here. Bonds finally came down a little bit. Nothing there. Tesla, working on a higher low V2 here, but we did reject the 50, so I don't like that either. Twitter, up like everything else today. UNG, nothing there. MACD looks like it's crossing, but that's about it. United Healthcare Group had a big move up. It rejected the 200. Here's oil, big day today. I don't think I would buy oil here today, being that we had the confluence of the 200-day and it rejected it. You also have the -1 ATR channel. I think it's a little chasey here. I'm gonna let this one go. Huge volume, but I'm gonna let this go. But you know, if somebody's dying to get into oil, it'd have to at least close above the 200-day minimum. We did buy oil back here when we went under the. We tested the 30 RSI. We rallied back into the channel, over the third ATR channel, negative third ATR channel. We closed above, and we had a nice 2-day trade. Obviously, I wish I would have held it till there, but the reason I got out is we rejected the 10-day and we rejected the -1 ATR channel. But it was still a good trade. It was still like a 4% trade. The dollar had a nice move up, came back down in the value zone, moved sideways, moved sideways, moved sideways. But no V1s, no triggers here for me. VIX, big down day today on big volume, as you can expect. So now it's made a lower high, nothing there. We did buy VIX here on a nice V2, went under the 30, back over the 30, had a nice V2, and we scaled out all the way to here. So that was a fantastic trade. Verizon's not bad. You have a higher low V2 close. Looks like it's going to close above the 200-day moving average. MACD went positive. We're above 50 on the RSI. On the weekly, we're back up into the channel. We don't have any telecoms. My risk would be a 200-day close below the 200-day. So all in all, I think this looks decent. The higher low V2 in a good part of the channel. It's above 50. It's above the 200. MACD went positive. So I kind of do like Verizon. Walmart V2. We have earnings coming up. The RSI is a little high there. Energy was a decent higher low V2. RSI looked fine, but now we've untriggered the V2. So we'll watch that. Financials, no. Real estate, kind of topping up there. Utilities, same. XLV, higher low V2 rejected the 50, not is above. There's no MACD. There's no MACD crossover yet. Let's look at the weekly. Weekly had a nice V1 on the weekly, didn't it? From week to week. Beautiful V1. Good chance it could probably get up into the 92 area, but I think I'm going to let that one go. So, all right, let's look at how we're going to manage. All right, let's see what we're going to do here. So it looks like Caterpillar is not triggering yet. So until it triggers, it's definitely off the table. That one's off the table. Also, it's still under the 200. Microsoft does look decent, but we're going to have to decide between. Let me take a look here. Philip Morris looks good, a lot of volume. It's a little chasey. I think what I'm going to do on Philip Morris, I think I'm going to buy a 1/2 position on Philip Morris right now. Or not right now, but I'm going to put it in. But I'm going to only buy a half. I mean, I do like how it looks, but it's a little chasey. So let me see if this will let me buy at the end of the at the end of the market. Yes. All right. So I have an order in to buy a half position on Philip Morris. Market on close. But it's only a half position. But I do like this bullish engulfing bar. I do like that we're over the 50 RSI. I do like we've taken out all the moving averages in one fell swoop. So, you know, I'm taking a half position. If we come back able to hold halfway, able to hold the 50, I may add the second half, but I'm not going to do it today. So, all right, so there's Philip Morris. PayPal's having some issues with the -1 ATR channel on the weekly. Did close above the, looks like it's going to close above the 5-day. It's up 3.4% today. 39 RSI. Looks like the Qs have lost the 50. It's a little chasey. I'm just going to let the Qs go, get that off the table. I think all in all, everybody, Microsoft looks the best. I'm not going to take Microsoft and the Qs and PayPal's. I'm not going to take all of that correlation into tech. But I think Microsoft looks the best in that we have a higher low, legitimate V2. We are above the 50 RSI. We do have all the moving averages below us. Looks like we do have a 520 EMA cross as well. On the weekly, we're still above the 10-day. We're still above the 1 ATR channel. It looks the strongest to me. So I am going to go ahead and buy a full position in Microsoft, market on close. All right.
Order cancelled.
Oops.
Order cancelled.
Okay. So I'm too close to the close to buy that market on close. All right.
Order partially filled.
Well, we'll buy it that way then.
Order filled.
So I had to buy that one right there. And 299 times 0.39. Yeah, okay. All right. So I'm going to let Caterpillar go because it untriggered the V2. Russell 2000, I'm going to let that one go. It doesn't look like it's closing above the 200 day. Microsoft, it does have the higher low V2 bounce off the 50. MACD is not positive, but RSI is above 50. So, you know, we do have some support underneath us, and it was the strongest on the weekly. I'm buying a half position on Philip Morris because of the bullish engulfing bar and the move over all the moving averages in the 50 RSI. PayPal, I'm going to just have to let that one go. The Qs, I'm not doing anything with the Qs because I'm buying Microsoft. I think I'm just going to let Verizon go. And then looks like energy sector untriggered its V2. So I'm being kind of conservative today. So taking Microsoft and Philip Morris. But in the context of what we have, we're going to have Microsoft, we're going to have Netflix. So we have a couple, you know, we have a couple tech already. Merck, pharmaceuticals, Johnson & Johnson, you know, more consumer discretionary healthcare. Then we have the DDM, which is our index, and then we'll be buying SPY at the end of the day. So all in all, I feel pretty good about it. It's not going to be, you know, we're not too heavy on positions. Like I said, was flirting today with a yearly high earlier, not now, but close. So, you know, we've navigated this pretty well, this move down. So basically everything is, let's make sure. Yeah. All right. So we're going to buy the SPY. We're going to buy Microsoft. And that is it. That is it. Max B says, entry signals fired and turned to... Oh, I already read that one. Dr. Jorgensen, PM, everyone smoke up now. Help the cause. I don't think that's very good advice coming from a doctor, Bruce. Mount Doji says, I knew Microsoft looked great. It does look good, doesn't it? But, you know, I mean, look at everything that's going on. We have a higher low V2 close. We have a 520 crossover. We rejected the 50-day moving average. And we're above 50 on the RSI, and we have we zoom through all these moving averages. You know, we're probably going to find some resistance up in here, but who knows? I mean, the only better thing is that we had MACD, but we don't have the MACD crossover, but we do have a lot of other good stuff. And the key here, Mount Doji, is, you know, where is our stop going to be? Well, you know, for me, it's going to be halfway of this washout bar right here at about 136.40. So a couple dollars. And we'll see if we get some follow through. But basically, you know, our risk is, you know, kind of here to here, and our rewards here to here. Even that, it's not super great, but
order filled.
All right.
Order cancelled.
So let me see. So Microsoft, we got at 138.60.
Order cancelled.
All right.
Order cancelled.
All right, so there's Microsoft, and then SPY we bought at 292.55. Well, that wasn't a very good fill. All right, so that's it. So DDM, we did hit 3 profit targets today, which is really always nice. Take some chips off the table. So that's been a nice profitable trade. And get this to come off here so we can see a little bit more clearly. All right, J&J, we hit 2 nice profit targets as well. Merck, we hit 2 today. And we're getting pretty light on that position because it's been moving up and up. Netflix, we did hit the 1 profit target today. SPY, we bought again here at the close. And Microsoft, we got right there. So that's that. So nice green day today. Always happy for that. Listen, if you guys have any questions about anything I did today, if you need some clarification, if you want me to take a look at any particular stocks, please let me know. Just don't be shy. Type it into the chat. But before we get to the answer section, I just want to put in my quick daily plug, let everybody know that I do offer private one-on-one lessons in the evening time via Skype. You know, if you've been thinking about having a private lesson with me, just reach out to me. We'll just have a free phone call or a Skype call. Just get to know each other a little bit better. I want to understand, you know, how you got into trading, what your process is, what challenges you have, and ultimately what your goals are. And then I'll put together a custom lesson plan for you to help you achieve those goals. And so my hourly rates and my email are in the description of this video. You can also reach out to me on Twitter. And then if you like this channel and you haven't subscribed, I appreciate if you would subscribe. And if you like today's video, if you like today's live stream, please do me a favor and hit the thumbs up button. You know, that's one way to have Google promote the channel more and get the channel out to more people. I get emails from people all the time that say, hey Greg, you know, I really appreciate having the channel. I've learned a lot. It's helped my trading. Really glad I found it. I found it because YouTube suggested it. So anyway, if you can, just down below, it's that little thumbs up, just hit that little guy, and I would appreciate it. Okay, so our fill came through on Philip Morris, 83.95. All right, so we've got it, you know, we're not super light, we're definitely not super heavy, we're kind of on the lower end of positions right here, but that's fine. That's fine. So all right, let me see. Matt Doji says, I knew Microsoft looked great. Yep. Max B says, seems like you are going through the same watch list every day. What was the criteria to put those stocks there? Do you add, remove stocks? I do, Max. I add them when I see something that's interesting. I delete them when they're no longer relevant or the chart pattern is just so broken. Doesn't look like I'd be taking any positions anytime soon. I do rotate them. I mean, generally what I like to have in there, I like to have the major moving averages in there. I like to have, you know, the big monster stocks like Apple and Amazon and Google. I like to have a diversity of stocks, not having, you know, I like large cap stocks. I mean, large cap stocks are my favorite, but I like to have a variety of large cap stocks in different industries and different sectors, so there's not too much correlation. But you know, one of the reasons I like to look at the same stocks all the time is, you know, you get a little idea of their personality, and because they are large cap stocks, I know that there's institutional support on all of these stocks. You know, and you know, one of the reasons that technical analysis works is because a lot of people see the same signals and they all get in and buy and sell at the same time. So I need something that's widely followed, and that's why I use large caps. And then also, you know, there's always liquidity there. Good bid-ask spreads. You know, when you start trading mid caps or small caps or micro caps or OTC stocks, you know, the bid-ask spread will just eat your lunch. So, but that's the reason, you know, large cap stocks, good liquidity, have a variety of different sectors in there. And probably most importantly, though, is that they are widely followed, institutionally followed stocks. So in my opinion, that helps on the technicals. Like I just added Adobe the other day. And actually the reason I added it was because Steve had added it in his, Steve Burns had added it in his watch list in his service. And by the way, newtraderu.com, that's Steve Burns' website. He has such great articles there. He has some courses. He has all sorts of different stuff that you can go check out. So go to newtraderu.com and take a look. And then also subscribe to him on Twitter at @sjosephburns on Twitter. He has great posts every day, and I would really recommend reading them. All right. How did everybody else do today? Anybody have any positions? I always feel like we're talking about my stocks, and obviously I guess that's the purpose of the channel, but I get interested to see how you guys are doing as well. Brian says, so far I've actually learned way more from this channel than what I was learning by myself from YouTube, because it was starting to seem like everyone was talking about the same thing. Yeah. Brian, one of the reasons that I started this channel was people read books, they see charts, they see setups, but they're static. You might go to a trading seminar and you're going to take a look at what the patterns are that day, and you're going to try to learn from that. But what I have found is a lot of people read books or they go to seminars, they learn just enough to become dangerous, but their exposure was only to one snapshot picture of time. What I like about this live stream is that we're constantly, I talk about the same thing all the time. I do that on purpose so that it helps to sink in, but also we're looking at different market conditions every day, sizing them up, making decisions. If you guys remember, over the last couple months, we've been buying dips, right? Then we had the big sell-off. Now we're buying higher lows, or maybe crosses back above the 200. But the market's always changing. So sometimes you're buying breaks above major moving averages. Sometimes you're just buying dips. Sometimes you're buying deep dips under the 30, back over the 30. Sometimes we're looking for moving average crossovers. So there's all sorts of different market conditions. And that's what I like about the live stream, is that we're looking at them each day in real time, discussing them, sizing up the pros and cons of everything. Murat says, how do you see Steve's watch list? So let's take a look. His watch list, let me move this over here, is under his video newsletter. This one's a paid service. I think it's $50 a month, but he breaks down the market 3 times a week. It's really good. I subscribe to it. I look forward to it every day. But to see that watch list, I think you have to subscribe to that, Murat. But it is well worth subscribing, I can tell you that. And I wouldn't recommend it if I didn't think it was helpful. But it's helpful for me because I watch it 3 times a week, every single week. Brian says, that's what I like about this, because this is like my small version of actually being able to see what happens in the market since I can't trade yet. Boy, that's kind of an interesting concept, that you can't trade yet. So, I think that's good. You're watching this completely objectively and getting a base. It's so important, Brian, at your age, you start putting some money away each month. There's a few management tricks that you can use, just long-term moving average crossovers, other things that we could talk about. For long-term investors, not just buying and holding and not doing anything with it, but maybe making a change or a trade, or going to cash, maybe several times a year or something like that. But yeah, man, I'm proud of you for coming here. I'm proud of you for learning this, Brian. A lot of people would have wished they would have learned these things back when they were 17 years old. So we did pick up Philip Morris half position today. We did pick up a full position of Microsoft, and that was it. We did scale out of some DDM. We did scale out of some J&J. We scaled out of some Merck. We scaled out of some Netflix. So yeah, I think we're in good shape. Max says you can trade. There are plenty of you can trade. There are plenty of simulators out there. TOS, for example, has excellent simulator, free if you open your account. Oh yeah. You're right, Max. I was talking about real trading because he's not old enough. But yes, you can trade on a simulator for sure. So far, I've saved up $1,000. Good for you. Hey, Johnny, good to see you. Johnny says, I lost about 10% this month. Oi. So I have not been excited about anything. Up around 15% for the year, but still just holding my long-term stuff now. Well, that's a great return, Johnny. 10% on the month is pretty brutal, though. I have to admit. Kind of takes the wind out of your sails. Because it's an emotional thing. I mean, you literally got punched in the face. And so, when that happens, what I have found over the years is, just trade small. Don't lose your skill of your trading and, get rusty. But I like to just trade very, very, very small. If I have a really big loss, just try to get some profits back on the ledger. You know what I mean? But I completely understand, and sorry, that's a big month down. Yeah, we go from being excited about trading to being disgusted with trading and back to being excited. But, this kind of weaves back to my one of the next 1,000 trades. Just try to take position size correctly, right? Position size so you don't get too destabilized. And identify your edge, identify your risk to reward, take the trade, win or lose, but just look at it long term. It makes it easier. Johnny says stops were wide, but volatility was wider. Yeah, I know. I hate when that happens, right? Murat says, I had 3 positions. One of them was beaten down already past week. It just did quite a bit short squeezing. It did just quite a bit short squeezing today. The other 2 were not down too much, so they are well into the green now. Okay, good. Good. Well, it should be interesting to see what happens tomorrow, to see if we can get some follow through, if that was just a one-day bump. Who knows? I guess we're going to have to see. Murat says, once things get fuzzy, I close all of my positions, which didn't have a good day. On balance volume. So you close all your positions. Yeah. Well, Brian, keep saving up, buddy. Keep saving up, and like Murat said, oh no, excuse me, it was Max. You can get in, use those simulators, TOS. But I think it's good that you're just soaking it in, taking it in, building a knowledge base. Max says, this summer I learned brutally not to hold into earnings. Cost me 8%. Ugh. Yeah, I know. I mean, if you can stay out of earnings, everybody, it's one of the best ways to avoid big losses. It's one of the best ways to have a big loss. Obviously, you can have a big win too, but it really comes down to being destabilized, because once you're destabilized and discouraged about trading, it's hard to get back into it. It's hard. That's why everything I do, everybody, is not taking too big of positions, not trying to have too big emotional swings. Too old for that anyway. You know what I mean? I just like to do consistent, just keep calm, keep steady, know that I'm going to have some variations, ups and downs, ups and downs, ups and downs. But my main goal into trading is not to lose money and to keep mentally and stably even keeled. Alrighty, well listen, I'm gonna head out on my hike, and it's a beautiful day here in Utah. I appreciate everybody coming by today, so thank you to Max, thank you to Murrett, thank you for Johnny, hang in there buddy, thank you to Brian512, good seeing you. Mount Doji, it's good seeing you. Dr. Jorgensen off to Pakistan tomorrow, so I hope he has a safe trip, has a lot of fun over there. And Frederick, good seeing you. Thank you for coming. Steve Burns, always a pleasure and an honor, Steve, to have you here. Always an honor. Appreciate it. Did I miss out on anybody? I think I got everybody. If I missed somebody, I apologize. But thanks again. Hope to see you guys tomorrow. Hope you have a good rest of your day, and go out and do something nice for somebody today, all right? And if you have any questions, if you forgot to ask me something, or if you didn't think of it, feel free to send me an email or a message on Twitter. So thanks, everybody. Have a good day now. We'll talk to you later. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.